Good afternoon, ma'am. Today I will be explaining about the accounts assignment that I have chosen option 1. What is accounting? Accounting definition. There are major three definitions given by AICPA, AAA, and the book definition. The art of recording, classification, and summarizing in a significant manner and in terms of money, transaction, and events which are in part of at least of financial character and interpreting the results thereof. This is the definition given by the American Institute of Certified Public Accountants (AICPA). Some more definition. Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgment and decision by users of information. This is the definition by American Accounting and Association. The book definition. Accounting may be defined as the process of recording, classifying, and summarizing, and analyzing and interpreting the financial transaction and communicating the results thereof to the person interested in such information. Second question. What are the various users of accounting information? Users of accounting information are categorized in two parts: internal users and external users. Internal users include business users, investors, manager, and employees. External users include lender, supplier, customer, tax authorities, competitors, government, and public. Business users. They need to access how well their business is performing. Financial statements provide information to the business owner that about the profitability of the overall business as well as individual products. Investors. They need to know how well their investment is performing. Investors primarily rely on financial statements published by companies to assess the profitability, value, and risk of their investment. Managers need accounting information to plan, monitor, and make business decisions. Managers need to allocate the financial, human, and capital resource towards competing needs of business through budgeting process. He requires accounting information to monitor the performance of business by comparison against past performance, computer analysis. Employees. For the employees operating in finance department, using accounting information is usually part of their job. This includes, for example, preparing and reviewing various financial reports, such as financial statement. External users. They include lenders. Lenders use accounting information of borrowers to assess their creditworthiness, that is, their ability to pay back any loan. Lender offers loan and other credit facilities on terms that are based on assessment of financial health and of borrowers. Suppliers. Just like lenders, suppliers need accounting information to assess the creditworthiness of its services on credit. They need accounting information of its key customer to assess whether their business is in good health. Customers. Industrial customers, however, need accounting information uh, about its suppliers in order to assess whether they have the required resources that are necessary for a steady supply of goods and services in future. The tax authorities. Tax authorities determines whether a business declared the correct amount of tax in its tax return. Tax authorities conducts audits of tax returns filed by the business in order to verify the information with the underlying account records. Competitors will make use of publicly available account information in order to assess the level of competition they face. Government. They ensure that a company's disclosure of accounting information is in accordance with the regulations that are placed to protect the interest of various stakeholders who rely on such information. Public. General public may also be interested in accounting information of a company. They include journalists, analysts, academic, activists, and individuals with an interest in economic development. For third question, explain the advantages and disadvantages of accounting. Advantages of accounting: maintaining systematic record. It, it is the primary function of accounting to keep a proper and chronological record of transaction and events which provide a base for further processing, and proof for checking. Meeting legal requirement. It is mandatory for joint stock companies to prepare and present their accounting for managing accounts in prescribed form. Protecting and safeguarding business records serve a dual purpose as evidence in the events of any dispute regarding ownership title of any property or asset. Facilitates rational decision making, managerial decision taken of organization to heights of success, and effective business policies competing with the rivals, advertisement, etc. All owe to well set of accounting. Replacement of human error. Proper recording of accounting transaction replaces the need to remember transaction. It is helpful in determination of financial results and presenting of financial position. Accounting makes comparative statement possible with previous years or with organization. Disadvantages of financial accounting. Recording of monetary items. It ignores the non-monetary aspects irrespective of their importance. For example, honesty of employees. Effects of inflation. In accounting, the transactions are recorded at historical cost. Accordingly, the assets of business are shown at historical cost. Window dressing of accounts is also possible. Accounting possible. There is no global standard in accounting policies. In India, we follow accounting standards, then globally, international standards by IFRS are followed. Errors is done by humans. Accounting is done by humans, so there will always be scope of human errors. Explain process of financial accounting. Accounting process. Completing sequence of accounting procedure which are repeated in same order during such accounting period. Therefore, accounting process involves following steps. Identification. In accounting only financial transactions are recorded. A financial transaction is an event which can express in terms of money and which brings change in financial position of a business. Recording. There is basic of accounting. This is the basic of accounting. All business transactions of financial character are evidenced by some documents such as sale, bill, passbook, etc. are recorded in books of accounts. Recording is done in a book called journal. Journal has ledger folio, which acts as a reference number with ledger. Classifying. It is concerned with the systematic analysis of recorded data with a view to group transaction or entries of one nature at one point so as to put information in compact and usable form. The book containing classified information is called ledger. Summarizing, it is concerned with the preparation and presentation of classified data in manner useful to internal as well as external users of financial statement. This process leads to preparation of following financial statement: trial balance, profit and loss account, balance sheet, etc. Interpreting and communicating. The recorded financial data is analyzed and interpreted in a manner that will enable the end user to make meaningful judgment about financial condition and profitability of business and operation. And finally, it is being communicated to the end user to enable them to make rational decision. Question 5. What are the objectives of accounting? Objectives of accounting: systematic record of transaction, ascertainment of result, ascertainment of financial position, communicating information to various users. Objectives of accounting are to maintain the systematic record of business. The primary objective of accounting is to maintain the record of all transactions of business, to ascertain the profit or loss of a business. For determination of amount of profit or loss, a trading and profit and loss account is prepared at the end of a period. Profit or loss is equal to sales into purchase minus salary minus office rent plus rent. To present the financial position of a business, balance sheet is the statement of assets and liabilities of business. To provide financial position to various users. One more objective of accounting is to provide the required financial information to different users, internal users and external users. Is accounting an art? Justify. Art refers to the method of doing work in a systematic manner to attain specified objective. Art requires some kind of skill and knowledge and practice. Similarly, accounting one has to be trained in this discipline to be able to perform accounting function as well. We can say that art is the study of implementation of technique and method. Accounting is art of because it presents the financial finding by following and implementing a universal accepted method, that is GAAP. Art is the study of applying scientific method to practical use, and accounting is an art as established tools and principle of accounting is applied in bookkeeping. Seventh question: accounting is not exact science. Why? Study of science is based on some principle and it is systemized. It is science because the business transactions are recorded on some basis or on basis of some principle and journal of transaction. Ledger posting, trial balance, and preparation of financial statement are done in sequence. Accounting can also be considered not as science because it is the body of knowledge, but since the rules and principles are constantly changing and improving, it is considered as inexact science. Thank you.